Today, I'd like to give a high-level overview of state housing finance agencies, or HFAs. There's actually an HFA in every state in the country, and in Vermont, it's the Vermont Housing Finance Agency, or VHFA. HFAs are state-chartered authorities established to help meet the affordable housing needs for residents in those states. Most emerged between the late 60s and the early 80s in response to federal policy to move the decision-making from Washington, D.C. to states that actually knew more about the local housing markets and the local housing needs in each state. This was also a time when federal funding for affordable housing was moving from being solely federally sourced, like through public housing programs, to more public-private partnership models. And in one way that this public-private partnership model took root was in the creation of private activity bonds. These were created in the late 60s, and there were only about 12 eligible uses for private activity bonds, which are unique because they are tax-exempt bonds that investors can purchase and will earn interest earning over time for as long as they own that bond. But the investor does not have to pay taxes on the interest earnings. This means that the investor can actually earn a higher yield on that investment because they aren't paying taxes on it. This is a tool that states have used across the country to great success as a way of subsidizing affordable housing, but not needing to use a direct appropriation. And so it was during the time when private activity bonds really took off that most states created HFAs. And that's when VHFA was created in 1974. There are other eligible uses for private activity bonds besides housing. And so over time, we've seen the creation of VEDA, the Vermont Economic Development Authority, who has sold tax-exempt bonds to support the economic development needs of our state, as well as VSAC, the Vermont Student Assistance Center, which historically had sold similar bonds to support the higher ed needs of our residents. The Vermont Bond Bank has helped municipalities over the years with their infrastructure needs to pay for roads, bridges, schools, and sometimes healthcare and hospitals through these tools. And so affordable housing is just one of many eligible uses of private activity bonds. And over time, that list has grown to be several dozen uses. Overall, HFAs in our country have provided affordable mortgages to millions of first-time homebuyers and financed many millions more of low and moderate income rental homes. VHFA was created by the legislature with the authority to sell these special bonds, but we are not a part of state government. We are not state employees, nor do we receive state appropriations. Instead, there is a unique model that supports our self-sustaining model. As I mentioned before, we sell tax-exempt bonds and other housing-related bonds to investors and receive those investments from those buyers, purchasers of those bonds. And in return, we will promise, I'm going to say, a 2% rate of return on those bonds. In return, we take those funds and turn around and make mortgages to rental housing developers and or to single-family home buyers, and we may charge 3% on the mortgages that we're making. And so we are limited to a very modest spread between the amount of interest that we can earn on the loans that we make and the amount of interest that we have to pay back to our investors who purchased our bonds. And that is how we are self-sustaining and able to support VHFA as an organization. Sometimes HFAs are a part of state government and are a cabinet-level agency, but in Vermont, VHFA is not. We are, again, authored by the state and exist in statute, and the governor appoints most of our board, and the other members of the board are ex officio by nature of their position within the state. It's very typical for state HFAs to be separate from state government Because housing investments are riskier than general state government operations, and so most states keep the housing borrowing and the bonding off the state's balance sheet and instead on the balance sheet of an independent agency like VHFA. VHFA is independently rated by rating agencies, and our ratings don't act in alignment with the states. For example, in the Great Recession in the mid-2000s, VHFA was downgraded, but the state was not, because the Great Recession heavily influenced housing finance. More recently, VHFA has been upgraded, and that is separate from the state's ratings. We are independent of each other. In addition to the loans that we support through our bonding, VHFA also issues tax credits for affordable housing. A tax credit can be claimed on an individual or corporation's state or federal tax returns, offsetting the income tax that they would have otherwise paid to the government. So we administer two different types of tax credit programs: the federal low-income housing tax credit and a state affordable housing tax credit. HFAs in general and VHFA award tax credits to housing developers. The developers then go and sell those credits to investors to raise the startup capital needed for construction or rehabilitation of affordable rental housing. In exchange for that, the developer agrees to make a certain portion of the housing affordable, and the investor gets to claim the tax credit on their tax return. The Vermont Affordable Housing Tax Credit Program works very similarly, but instead of this being a 10-year credit that investors can earn over 10 years, Vermont's program is a 5-year credit. And instead of offsetting income taxes, it goes to bank and insurance companies' deposits. In addition to rental housing, the state tax credit can support the construction of affordable new homes for home buyers, energy-efficient manufactured housing, and VHFA's down payment assistance program for first-time home buyers. VHFA supports many other activities besides these direct lending programs. We have other sources of funding that complement the programs I've mentioned. For rental housing, we offer pre-development funding and other financial support for development. VHFA monitors rental housing investments to make sure they are both financially and structurally safe and healthy for the residents, as well as that all those housing developments are complying with state and federal program rules. And finally, VHFA works with partners across the state to promote affordable housing opportunities, including research and advocacy. We work with municipalities, regional planning partners, and others to support local housing policies that promote housing. In the end, VHFA's mission is to finance and promote affordable, safe, and decent housing opportunities for low and moderate income Vermonters. That is why we were created, and that is the mission we strive to reach every day.